Okay, everybody, it's me, Gregory Mannarino. It's Thursday, May 5th, 2022. Let's start off with this, people, because it's absolutely freaking incredible here. So, U.S. first quarter production, when I use the word cratered, I'm being nice here. This is a 75-year low. I mean, literally falling off of a cliff, dropping 7.5% in the first quarter. Now, I mean, honestly, the propaganda ministries with their dog shit, cat shit, wrapped in bird shit, you know how strong our economy is, we're doing fabulous, everyone is rich here. I mean, this ties right in to what we just found out with regard to our trade deficit. I'm kind of chuckling here, but it's pathetic here. A 22% rise in our trade deficit. We're not making anything. I mean, seriously, first quarter production, a 75-year low, make that up. You can't do it. It's impossible. Labor costs are surging as well, up 11.6%, and we got first-time unemployment claims coming in higher than expected. Well, I mean, you want to talk about some bad economic news? Well, here you go. It's just out of control, and you know, look, these are numbers, but it's about people too. People are suffering, people are hurting, and it's all by design. None of this is by accident whatsoever. Excuse me. Itchy nose. Anyway, with that said, here's the setup for the market, and it's not great this morning. We have stock futures lower, nothing dramatic. We have crude oil surging higher yet again, okay? And you know that this is just the beginning. We got the 10-year yield. I mean, it came down just a little bit, a big move higher in the dollar. So this morning right now, with the 10-year yield coming down a hair, the stronger relative strength or comparative strength of the dollar, little bit of a safety trade coming on here. Is it going to play out to be a fear trade today? In the face of absolutely horrendous economic news, we'll see. I mean, you know how this works. Generally, when we get bad economic news, and this is the worst. This is the worst that we've gotten in quite a while. The market generally tends to respond in a positive way. But we had one hell of a run-up yesterday. I don't want to see the market give back any today. I said yesterday, I wanted to see a follow-through rally today. Anyway, look, the fundamental dynamics that are in place here seem to be, at least again, the bad economic news being positive because the market realizes the Fed's going to keep doing what they're doing and they're not going to stop. I don't care what they're saying. Honestly, it's all about understanding the bigger picture and what their end game is. They want to own it all. They want to be the lender and buyer of last resort. They don't care about inflation at all. They want to continue to inflate, and they'll use any other mechanism that comes their way. If we do experience some kind of quantitative tightening, you know, as they said yesterday, the Fed, oh yeah, you know, we're going to be running off our balance sheet. First of all, who's going to buy the debt? I mean, they're going to have to let it just mature. That's it. No one's going to buy the debt on the Fed's balance sheet right now. Nobody. It's yielding less than you could actually buy on the open market. So I don't know what kind of nonsense they're trying to pull off. It's just more lies and bullshit, propaganda, distractions. You know all this already. But that's really the story here. So it's going to be an interesting day in this market, if you ask me, the way things are playing out. I mean, crude is out of control yet again, and it is poised to make a much bigger move higher. People, look, how do I put this to you? You got to own oil and gas producers in this environment. Crude oil itself, you know, there's a lot of exchange traded funds or ETFs that you can look at. You got to take advantage of this. There's no doubt about it. Commodities. I mean, I've been explaining this. Ticker PDBC has done phenomenal as of late. And all my most recent stock picks or suggestions are right on my website, traderschoice.net, just underneath the chat room. Take advantage of these things. Anyway, let's move forward here. Silver is doing very well this morning, up 3%, over 3%. You got gold catching a bit. Cryptocurrency is under a little bit of pressure, still around 39,000 for Bitcoin. Okay, you know that you need these things in your portfolio. I mean, honestly, if you are not betting against the debt, realizing that this whole freaking freak show is just assuring that global debt is going to balloon. I don't care what central banks are doing around the world with regard to what they're saying. Oh, we're going to do this, we're going to do that. It's all, well, you know, look, the goal here is to inflate. It's always been to inflate. The goal here of central banks is to destroy their currencies. All right. Henceforth, why we're seeing inflation surge around the world. The goal of central banks is to keep the stock market propped up while the economy continues to crater. I mean, crater. A 75-year low with regard to, what is this here? We might as well be going back into the Middle Ages. This is insane. With regard to first quarter production here in the United States. I tell you, and labor costs surging at this kind of a pace. What does that mean for you with regard to inflation? What does it mean for your family? You think you've seen it all? You haven't seen anything yet, and I'm telling you. So you got to understand what you need to do, keeping yourself on the right side of this equation. Take advantage of everything that's thrown your way. Don't be a one-trick pony here. And I know there's a lot of people that are one-trick ponies, and I just don't understand that. You got to be kind of spread out. You got to bet against the debt, become your own central bank. That means holding hard assets, silver more specifically. I love gold. I love platinum and palladium too, but silver's the place to be. You got to have some crypto in your portfolio. And in my view, you need to take advantage of this freak show stock market. You got to do it. There's nothing here at all that is telling me that we are in some kind of a crash or anything along those lines. That's it. I mean, look at the debt market, the driver. How many times do we have to say this? And I still continue to get emails about, Greg, you're wrong. The market's crashing. You don't want to call it a crash because you want to make yourself look right. It's a technical correction. Look it up for yourself if you're that stupid. Anyway, look, I think you got the situation down, everybody. I just want you to be ready for this. Everybody needs to understand what's happening to them and realize seriously that this is not at all by accident. The Fed did not overshoot its 2% target on inflation by accident. This is all by design. They're continuing to inflate. Central banks around the world they're all on the same page. They're going to continue to inflate. They're going to continue to wipe out their currency by design, leading up to a grand finale. You know what that is, a meltdown in the debt market, which is going to destroy the stock market. And who knows where the bottom is? It's a bottomless freaking pit. It's really the truth. It's going to be quite a moment in time. But right now, we just take advantage of everything that's going on around us, realizing the bigger picture. Anyway, you got this down. All right, people, look, I'm out of here. I think I covered everything I needed to for you this morning. Please share the video, get it out there. And I am so happy to see more of you commenting here. Some very smart people are starting to come out of the woodwork and place comments here on this blog. So I am looking forward to reading your comments. I do read the comments. I promise you that. And I'll see all of you later at the end of this day, which looks to me like it's going to be an absolute freak show. We'll see how it plays out. I'm out of here.